A slight decrease in interest rate can lower your monthly payment by hundreds of dollars per month. So, how do you make sure you get the lowest rate possible? In this video, I'm breaking down the top strategies to help you secure a lower interest rate when buying a home. Things like boosting your credit, buying discount points, and selecting the right lender and loan product that'll save you money. I'm Hannah, a real estate agent serving North and South Carolina and working alongside my three sisters. We've helped over 1,000 buyers and sellers make smart real estate moves and want to help you do the same. Buying a home is one of the biggest financial decisions you will ever make, and we want you to have all the information you need to begin your home buying journey with confidence. That's why we created a free home buying guidebook packed with expert advice that's helped our clients buy homes they truly love while also maximizing their savings. Download your free copy using the link below. So, how can you get a lower interest rate when buying your home? Boost your credit score. Your credit score is one of the biggest factors in determining your interest rate. A higher score means lenders see you as a lower risk borrower, which usually translates into a lower rate. The opposite is also true, but there are ways to improve your credit before applying for a mortgage. Pay down high credit card balances because maxing out your credit limit negatively impacts your credit score. Avoid opening new lines of credit before buying a home and make all of your payments on time. This includes car loans, student loans, and credit cards. And check your credit report for errors so you can dispute anything that's inaccurate. Even a small bump in your credit score can make a big difference in the rate that you're offered, so it's worth working on before you start house hunting. Buying discount points. A discount point is an upfront fee you can pay to lower your interest rate. Each point typically costs 1% of the loan amount and reduces your rate by about 1/4%. Is it worth it? If you plan to stay in your home long term, buying points can save you a lot of money over time. But if you're planning to move in a couple of years, the upfront cost may not be worth it. So make sure to calculate your break-even point to make sure paying for points makes sense for your financial situation. Compare lenders. They offer different rates and terms, so it's smart to shop around. Here's some things you'll want to compare. Obviously, the interest rate. Make sure it's not quoted artificially low due to hidden discount points. Loan fees is another one. Some lenders charge higher origination fees and processing fees than others. APR, or annual percentage rate. This includes both your interest rate and your lender fees, giving you a better picture of the true cost of your loan. If you need help finding a great lender, I have a network of trusted lenders all across the US to connect you with. Just click the Get Referred link below, and I'll make sure you're in good hands. Increase your down payment. The more money you put down, the less risky you appear to lenders. A higher down payment can help you with getting a lower interest rate. Avoid private mortgage insurance, typically referred to as PMI, if you put down at least 20% on a conventional loan, and reduce both your monthly payment and how much you pay for your home over the life of the loan because you're borrowing a smaller amount of money. Even if you can't put down 20%, increasing your down payment from, say, 5 to 10% might still help you secure a better rate. You also want to choose the right loan type. Different loan types come with different interest rates and fees, so understanding the pros and cons is key. Conventional loans typically have a slightly higher rate than FHA, but offer lower overall fees if you have good credit. FHA loans tend to have lower rates, but they require mortgage insurance for the life of the loan, which often increases your payment $100 or more per month. VA loans offer great rates with no down payment and no mortgage insurance, but you have to be eligible for them. And USDA is another lesser known option that allows you to buy a home with zero down payment. But it can be tricky to get due to the requirement that both you and the property must meet the pretty strict qualifications. For a more in-depth look at different loan types, check out this video on interest rate red flags to avoid when buying a house. So let's recap. If you want to get a lower interest rate when buying your home, focus on boosting your credit score, considering some discount points, shopping around for the best lender, increasing your down payment, and choosing the right loan type for your financial situation. Be sure to download your copy of our home buying guidebook so you're prepared to start your home buying journey with confidence.